We're still in the business of shaping policy and advancing development, and we're starting global trends, looking at global trends from the U.S., where the Federal Reserve is expected to take a crucial decision as regards benchmark interest rate this week. All across the United States, a lot of people are eager, to see what will be the decision of the Fed. Investors, consumers are eagerly waiting to see whether the interest rate is going to be cut or not. What will be the implication of this if it's being done or if it's not being done? We have Souq Orovwuje here with us. He's here to provide his own perspective to this conversation. Glad you have you join us this morning.
Good morning, Femi. My pleasure to be here.
Welcome.
Good morning, Blessing. Thank you.
All right. Let's start by looking at the decision by the Fed for like a few months now has decided to leave the interest rate at the rate of 5.2%, between 5.2% to 5.5%. Do you consider that to be strategic? What do you think is very crucial about this decision to keep the interest rate at the rate it is for months?
If you look at it from a political economy point of view, this is an election year in the United States of America. So the Federal Reserve Bank, why they are isolated from politics, but then some of the decisions that are made there has a political undertone. From that perspective, I think in my view that those rates will be kept at that level for some crucial time, maybe particularly till after the elections. These are my perspective.
For keeping rates at the way it is now till after the election, what could be the likely implication on the economy and on the citizens?
From a consumer point of view, it may have some negative impact in terms of disposable income that are valuable. Even though the employment figure has risen tremendously, then if you look at it from the perspective of energy rates that are going up, then that might affect consumer spending within the United States of America. But then they are meeting in a few days, I think. That decision is squarely within the purview of the Federal Reserve Bank. But then nobody knows how they will come out with a decision after their meeting. But my thinking is that they will keep that rate for some particular time. But the impacts, we cannot really say for sure. But if the cost of energy is going up, then it will negatively impact consumers.
Now, the essence of keeping the rate at, the interest rate at the rate at which it is now is to see how to manage inflation. And if you look at the U.S. economy, it's one of the strongest in the world. You have inflation at rates of 3.1%, even though the target is to achieve 2%. Do you still consider this to be a good development on the part of the Fed, when you have the U.S. inflation at 3.1%, even though the target is to have it at 2%?
Well, if you look at the various dynamics within the economy, those projections to keep it at 2 point something is desirable, but the current state of affairs may not be able to sustain that projection. And that's why that rate will hover around 5 point something for a good period of time. And if you look at the trajectory in terms of its relationship with China and some other dominant economy, from the point of view of political economy I mentioned earlier, that remains to be seen in the nearest future.
All right, but having the rates, inflation rates in the U.S. drop from 9.1% when it peaked at around 2022 and into about 3.1%, do you think holding rates around 5% interest rates has worked, and it's a bit justified if at the end of the day the Feds come up with a decision to maintain the rates?
The point is that there are indicators that the Federal Reserve Bank will look at. So when they have that meeting, whatever data that is brought before them, that will determine what they will do. So whether they will cut or not cut is dependent on the data that they will be making their decision on. So, but We're not within the room where the decisions are made, but based on speculative, there's a likelihood, based on the elections, that that rate will remain as it is.
Let's look at this way. Is it likely the Fed will give us a surprise? You know, probably a slight increase. Can that occur? You know, I know in the next 24 hours or 48 hours, we should be able to tell. But is that likely?
Yeah, decisions are made
Let's also look at the other way.
Yes, decisions are made based on the information that are brought before the table. So we on this other side may not be able to speculate because we don't have the inner workings of the Federal Reserve Bank. So let's leave it at the realm of the projection that are in the media space, that they are likely to hold the rate for some time. I think it's better to land in that way so that we don't get into a kind of disinformation to the public.
Okay, hypothetically speaking, what would the rate cuts mean in an election year? And what would keeping it mean in an election year?
Well, that again is a very tricky question to answer. It's within the preserve of the Federal Reserve Bank to make decisions as the banker of bankers. So since we're not in those boardrooms, it might be difficult to comment whether if they reduce the rate, whether they keep the rate. That is a subject of the decision of the bank. But then if you look at the trajectory and the information that we have emanating from the media space, there's the likelihood that the rate will be high and they will keep it at that level for some time to come. So let's leave it at that. I don't want to comment on that.
But I was going to ask that. Let's assume it's a hypothetical situation that rates are cut, and this happens to be an election year. What would it mean? What effect will it have? Will it have any significant effect on the election?
Listen, I don't think I want to comment on that. On that, yes, because the point here is that the speculation based on what they have before they go into the meeting is that those rates are likely to be there for a long time. Based on that prognosis, it might be difficult to say they would like to cut the rates. But then if you want us to speculate, which is dangerous most times because you are giving information to the public, so you have to be careful with the kind of projections you make so that people don't make some decisions, particularly when it talks about global financial trends.
Okay, let's do more on the statistics we are sure of now, which is the present one between 5.2% and 5.5%. Now, what will be the implication of this for investors if perhaps we have the same figure at the end of the meeting?
Investors will always invest, but the challenge is that the rate at which they assess credit in terms of their businesses may be relatively high. Then if that is high, what is the implication there is that the consumer, who is the final person in the value chain, will always pick up those rates. So the point I'm making is that if that rate is there and people invest, then they pass the cost of funds to consumer, particularly from those who are into consumer good manufacturing. So it's the consumer that's always suffer when you have interest rates, vis-a-vis where energy cost is going very high in the United States of America. So the disposable income that will be available to people will be less than what they currently have if that continually maintained between 5.2 to 5.7%.
Saying that disposable income might be hard for, or might be less for consumers, for those who have mortgage to pay, are there chances that there could be default?
No, when it comes to mortgage packages, there are windows when you draw up a mortgage loan where the beneficiary of the mortgage finance is not able to meet up based on the financial projection that were there. what they can do is to do a repayment package. So there may likely be failure in terms of meeting those obligations. But what goes on the mortgage operator is to see how they can rework those plans. So what you are expecting for a period of time may not necessarily come in. So you do a rescheduling of the loan so that you can get something and at a later date. So if you have a tenor period of a long period of time, so you reschedule in terms of the current interest rate so that the consumer don't really get hard hit on their payment possibilities.
Now, one of the indicators looking at the strength of the U.S. economy has to be the issue of job creation. So let's look at the statistics. For January, the report was that 353,000 jobs were added. Meanwhile, the projection was for 185,000 jobs to be created. But now, the result, achieved, has surpassed the expectation. The expectation was 185,000 jobs, and now you have 353,000 jobs. How do you react to that as regards the strength of the U.S. economy?
That's a good development, particularly based on the projection they have. So they have overachieved that projection. So which is good. That means there's more money in the hands of citizens. So when there's more money, then the economy will be very active. So people are able to make purchases. Then people are able to pay their mortgages as well. Then the credit window is equally expanded. So that will help to reflect the economy and more taxes at the end of the day for government. So I think the increasing number in terms of employment figure in the U.S. is remarkably okay. But the challenge there, even when this job has been created and some disposable income are available to citizens, the cost of energy might equally take the money available to citizens. So at the end of the day, there might be a balance in terms of the improvement on the employment, particularly from the non-agric sector. Tourism, restaurants and all that have done remarkably well, and that would put some more money in the hands of people in the U.S.
All right, so there seems to be a lot of apprehension around this MPC meeting, but it's not the first, neither will it be the last. Why do you think there's a lot of apprehension around this?
The apprehensions are essentially driven by the fact that if there's an increment in terms of interest rates, it's going to impact on business. So people are apprehensive that what are they coming out with? So if you increase the rate, for example, whether it's marginal increase or not, so it's likely to have a negative impact on investment. So people are apprehensive. So what are we expecting? So once that apprehension come true, then businesses will suffer, then consumers will suffer more, because at the end of the day, it's consumer that will bear the burden of interest rates, even in terms of taxation, because that will impact them negatively. So that's why there's apprehension, particularly from businesses and even from consumers, because if the rate goes up, then they have fewer money to spend.
All right, let's look at the cost of living in the U.S., which is also very crucial at this period. Perhaps if the decision by the Fed to leave the rate the way at which it is, how will that impact on consumers, and then relatively talking about the cost of living?
The rate at which business is done is already impacting, because when you have a speculation that you want to keep an interest rate at 2.3 to 7%, and you're hovering around 5.3 to 5.5 to 5.7, the implication is that it will impact on consumer in terms of their purchasing power. So when the consumer don't have disposable income that they can use in terms of purchasing household item, then it will impact on the cost of living, than even the standard of living of the average American. So those apprehensions are legitimate, but let's see how they're able to sustain the current rate that they're not likely to cut.
It seems to be a similar situation in England, as the Bank of England is set to hold rates as it awaits more signs on inflation. And they will be making public the decisions of the MPC meeting on Thursday, which is just a day after the US Fed released the decisions of their own MPC meeting. What's going on in the West?
No, generally the global trend is that the cost of living has gone up tremendously. So those countries are trying to see how they can keep the rate the way they are, because if they increase the rate or they cut the rate, whatever is appropriate, is likely to impact on the citizens. And unlike our client, once there's a dislocation in those systems, there's the likelihood that you have a protest. And once protests are made, those who are in government are likely to resign. Yeah, people don't resign from from their appointment. So I'm sure the trend is tough globally. So just like in the US, the UK will likely to keep the rate the way they are, so that the impact on the citizens will be managed minimally.
Now, economic-wise, what are the lessons here for other nations? Looking at what the U.S. is doing with this benchmark interest rate, and a good example is that of England as well. You know, the strategy being deployed in managing inflation. What are the lessons here for African nations?
The lesson here is that most of those advanced economies, as they are called, have always tried to maintain a single-digit inflation rate, unlike our environment, where you're talking about 22-point-something% inflation rate, where at the rate at which the central bank give money to the commercial bank. And if you extrapolate that, 22, you are likely to get a rate for commercial lending at about 30%. And the implication for businesses is that if you are taking money for businesses at 30%, where energy is a problem, the cost of doing business is expensive, multiple taxation, then all this rate will be transferred to the country's citizens. So the lesson is our government should control the fiscal side and the monetary side from time to time, so that they're able to maintain a single-digit rate, so that there's much money available for lending for the real sector that we help to stimulate economic growth.
Looking at the way the Bank of England and even the US Fed have been battling to control inflation rate, do you think that for a country like Nigeria, the battle did not begin on time, and that's why it quickly moved from single digits to double digits and now at about 31%?
Yeah, I think the problem here is that the regulatory framework and mechanisms are not really yielded to. Two, the overdependence on the foreign exchange market has made a lot of distortion in the Nigerian economy. So for us to be able to sustain a single digit like the developed country, we must find a way to block those leakages. The regulatory framework, particularly the central bank, in terms of the supervision of commercial banks, must be scaled up, so that some of the issues in commercial banking, when they have what they call round tripping with forex and all that, will stop. I think that will help. So a framework that is sustainable, a fiscal discipline on the part of government. The government too must find a way to see how I can reduce the size of governance and some of the luxury lifestyle of those who are in leadership, particularly state governors. We help to see how we can keep the rate of inflation. So we should reduce our overdependence on imported items.
All right, the Bank of England MPC meeting is expected to take place tomorrow. As expected, you have investors, even stakeholders, that eager to see what is going on. Do you foresee, I know you've spoken earlier as regards that of the US, but now that of Bank of England or in England, do you foresee any change in the rate? They've decided to keep it at 4.2% as well, quite strategic like what US has done. But do you foresee any surprise tomorrow?
No, based on if you do the media scan of what they have put in the public domain, the point remains that just the same way the US is, they are likely to keep it at 4-point-something percent.
So
because the implications.
They want to remain brothers.
Not necessarily so. They're just doing that in the interest of the citizens, because if you do that, the implications are far-reaching in terms of what will be available to the consumer at the end of the day. Those are climes where people are sensitive to the plight of citizens.
So data for the month showed in the UK showed that there have been softer conditions in the job market, in the labor market rather, and there's been a slow pay growth, and the services inflation is dropping. Do you think this is likely to push the Bank of England to maybe cutting rates?
I'm not too sure, and I don't want to speculate like I mentioned earlier in the case of the United States of America. But what is in the public space in terms of the information they put out, those information sometimes is to see how public opinion can be changed in terms of decision making. And if the speculations from those who are in authority there are saying that there's the likelihood not to cut the rate, then let's leave it at those speculative information that we have in the public arena.
Let's look at this development in spite of the strengths of the economy in the UK. You still have high cost of living, cost of energy, and also prices of foods, even though it's a global phenomenon. But why do we still have this kind of development? Almost till it started towards the later part of the last quarter of last year, and now it's moving towards the first quarter of the year, and yet there's no respite.
The COVID-19 issue is one of the factors that has been responsible to the global downturn. But then most nations are making effort to see how they can balance this issue with supply chain and the disruption in the global economy since 2021. So those are some of the implications, and that's why there's a high cost of living across the globe. The standard of living has fallen, not too drastically on the other side, but on the global south here, the impact is so much. But let's see how leaders are able to upscale some of those factors that will enable economic growth. Therefore, development can be enabled, and that will benefit citizens.
But across Europe, there's been lower cost for energy. Shouldn't that in any way have maybe perhaps improved the economy of England and helped with its inflation?
But you have to be country specific. You know, there's a global for the Eurozone. You have that of the UK that we just spoke to. So when you talk about the Eurozone, if you move from one country to the other, yes, we talk about Germany, France in particular. There's a lower cost of energy in those few countries, but you cannot say that for the whole of the Eurozone. So there are other European countries that are struggling with the high cost of energy. But then for those countries like Germany and France, that will improve in terms of what citizens are able to benefit. So the disposable income, the ability for people to spend money, and government is able to sustain its collection of taxes, would be good for those specific country in Europe. But then we cannot use an overall trending of the trends in Europe to say all is well for every European country.
Now, looking at the UK, battling inflation almost in a similar manner as the US is battling. What is a common thing between these two economies, the US economy and the UK economy? Femi asked earlier if they are brothers, like brothers. So what's it about both economies?
Well,
That's common.
Just put simply, the US is one of the greatest economy in the world, so as the UK. But the UK is a bit distant far from the United States of America, so that can just be put simply as the relationship, the biggest economy of the world. And you can, if you talk about the UK, if you talk about their colonial relationship with India, Africa, and the rest of them, and the sustenance of most of their businesses are still with the colonial partnership that they draw a lot of investment from. But America, on the other hand, still remain a country to beat when it talks about the developed economy.
All right, let's make reference to the forecast from the governor of the Bank of England, and I would love to quote him so that you react to that. He said, inflation this year will start to fall back towards target in the spring. That's good news for those wanting rate cuts. For those who desire to have it, they might likely have it in the spring. But it says it will then start to rise again towards the end of the year to 2.75%. Bad news for homeowners yearning for a return to cheap mortgages. How do you react to that?
I think that's just reacting to the trend, the data they have. That,
so for those who are expecting an increase, it's giving a picture of when will likely happen. That's in the spring, towards the end of the year.
At the end of the day, it's likely to go up again. So those who are thinking of having cheap mortgages should not say uhuru yet, if we use the African terminology. So there's a likelihood that the rates will drop, but at some point in time, the rate is likely to go up. So this is more of a diplomatic language from the governor of the Bank of England, saying that, yes, we'll make some substantial gain in terms of the rates, but then there's a likelihood based on the trajectory in terms of how the numbers will come, and that there should not be celebration yet, but that things might be good for some time, then things are likely to get bad at some other time. I think it's just trying to balance, assuaging the fears of citizens.
So for those who are expecting a cut, he has given a time frame.
Yes.
And those who are expecting, any change as regards mortgage, he has also created
and that's the way leaders should speak, so that people don't get off the curve.
Okay, wrapping up, it's also reported that those who are coming forward for support who are kind of out of job on the increase in the UK as compared to those with full-time paid jobs.
Well, that's the global trend. The jobs are not really there. So the jobs are not really there. So what do you do? I think the government is to find a way to create those jobs to sustain the economy. So, but the difference with us or with them is that there are some little things that you can get when the jobs are not there. Unlike our environment, once you don't have job, you're essentially dependent on some charity. They may not come from time to time.
You begin to ask for urgent 2K for those who do not understand what that means. I leave it. We just ask around what urgent 2K means. Thank you so much, Sam Orovwuje, for being here on the show today.
My pleasure.
Early exchange, shaping policy, advancing development.